And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We've got Coach Matt, Coach Tim, and Coach Cody. The regular crew is here to break down the markets and talk about what's happening out there across the board. Some economic data, some interesting things that are coming through the pipeline. Obviously, we've got to start with the U.S.-Iran tensions, Matt. Seems like they are de-escalating a little bit, although this is a day-by-day thing. I don't think we really know anything else. I did see that at the funeral or whatever, kind of event that they had there to celebrate that man's life that was killed, that we took out, there were 50 people trampled and died. It kind of reiterates to me the emotions around this whole thing.
Did you see the pictures of how many people were there?
I didn't know. I saw the headline. Yeah.
Hundreds of thousands. And so, those things, they certainly can happen in those types of heightened emotion situations. It's certainly unfortunate. I read those headlines too, that there was some de-escalation, but that's not my read on it. Iran's talking about, targeting 13 different military sites, maybe some cyber sites, cybersecurity issues and whatnot. But the simple reality, Tim, is the market, even though these tensions have probably slowed the market a little bit, the bullish momentum, the market hasn't cared about it yet. The market wants to see exactly what the retaliation is, if it's going to see an increase, how Trump kind of responds to that. And until we see that, I mean, we gotta apply from a price action perspective.
Yeah, and we were talking about that a little bit on the podcast yesterday, is that price action is king and you got to focus on the chart, let that dictate it to you. Obviously, as the markets observe and interpret the news that is coming out of the Middle East and globally, you're going to see oil moving and gold moving and settling back in or jumping depending on the nature of the day. We're going to look at all those charts one at a time as we go through the show here. And then
definitely it's had a bigger impact on the commodity market than it has on the stock market.
Yeah, I mean, those two aforementioned commodities, gold and oil, they both jumped up real well, and then they're pulling back. Actually, the charts look really, really good on the pullback as well. It's going to be interesting to watch that thing come back and find some support and see if there is a new tradable entry point for oil or gold if somebody had missed it in the past. And then a bunch of corporate news, Matt, that we're going to get through one at a time. Let's start with the S&P 500 here. Obviously, the S&P is above the moving averages. You've got a rising 9, a rising 20, rising 50. I've got markets still bullish. I believe we at Tackle Trading still have them bullish. What's your read on the chart here?
Like I said, the bullish momentum certainly has slowed here, but at the end of the day, what you're really kind of seeing in terms of the price action is you're starting to see a high base type of scenario form. And right now you have overhead resistance right there at that tick, right there at 32.63. You have intraday support levels, and let's break that down on that 30-minute chart here. You have a very clear intraday support level right there at 32.10. So the market's really kind of basing in between, 32.10 and 32.60. And until we start to see a breakout one way or the other, I mean, it's just a hesitation. That's all it is. It's a point guard who's driving to the lane and they hesitate just a little bit and then they burst. So I think what we're kind of waiting for, and as I was scanning this morning for individual stocks, both in terms of the stock and options report, as well as just, my internal scans and watch list, I kind of saw a lot of stocks really kind of doing the same thing, just, bullish uptrends, increasing momentum, and just kind of a little bit of a hesitation, high base type situations. And, if this market does break out, I do believe there's going to be some really good breakout candidates to trade from a swing trading perspective.
Well, first of all, there's a bunch of them even today in the semiconductor space and some of the individual companies that I've been watching. And then there's a lot of companies that I'm watching and waiting for the breakout off the Tackle 25, the poor boy covered call. Many of those covered call watch lists, I'm seeing nice trending develop, in some of those charts. One of them is Micron. I was looking at that earlier with the semiconductor space. There's so many of the semis running here today, Matt. And a big part of that was just an across the board upgrade in this sector. What do we know about semiconductors here today?
Well, yeah, a lot of the semis are doing the exact same thing. I mean, you got Micron with the upgrade today, and that's kind of what's really kind of driving Micron. Really powerful candle. I mean, you're not seeing any profit taking on that type of move on that breakout. That gives you a little bit of conviction kind of on Micron that we should see some price appreciation. Maybe we hesitate a little bit, but $60 not out of the equation on Micron here. Real good trigger, powerful bullish candlestick on really positive news. But it wasn't just Micron on MCHP here. MCHP, nice little breakout candidate in this space as well. And they basically raised Q3 guidance, and everything positive was coming there. And then you have NVDA that's really kind of setting in that breakout channel here as well. Nice little high base type forming, moving averages have caught up to it. Real clean trigger there on NVDA. And then on AMD, looking at AMD, kind of forming a little bit of a high base, four days in a row, just a little hesitation after that breakout that we saw last week on AMD. And that's what we're seeing in this space. It's a very, very bullish space. And Micron and MCHP both had really positive news today. And, this space has been just a runner for the last really 3-4 months. It's been very, very bullish. We know this space has been held back because of the trade war. And once you started seeing positive rhetoric, in September and October coming out of that trade war, these companies started to run. And, there's been really nothing to stop them. A lot of them are overvalued right now. I wouldn't exactly call this, Micron, AMD, or MCHP a value type play. They're growth type plays, but, you got to play the momentum when you see it. And we're seeing it in this in the semiconductor space right now.
Earlier you mentioned as you were going through your process to find candidates today that you always go to your watch list. And I thought that was a great little pro tip right there, by the way. If you're out there watching our show, you should have watch lists developed. Matt, when we're thinking semiconductors, the very first company that comes to my mind is AMD. Maybe 1B would be AMAT, though. It's only one of the only ones we have not looked at. And I got to tell you, Tackle 25 candidate that did not catch the breakout yet. When I came to the watch list on this one and I looked at AMAT, I'm like, okay, great news in the sector, great news in Micron and MCHP and all these other companies. And I didn't really feel like I missed this one yet. If I don't own it, where's the trigger?
I think the trigger is above 62.5 here. I mean, you got a tick over there at 63 that you might be a little concerned about. Maybe you wait for confirmation here, a close above 62.5, and then, bar by bar above that level by placing the order above the high of whatever that confirmation candle is. But I look at that 62.5 level on Applied Materials. And, even though, Applied Materials didn't break out today, I mean, it's still up 3.47% on the day, up, $2 on the day, and threatening a breakout. If this space, if the semiconductor space breaks out, watch out.
I'm with you. I'm with you. Keep them on a bull watch list out there, team. And by the way, if you're watching our show for the first time, if you're out there and you're new, welcome. Hashtag Team Tackle. As always, when you come on in here, guys, I'm going to train all of our team out there, and I'm going to do the same thing. Give me that thumbs up, click the subscribe, and click the bell. That way, when we come here each and every day, you know when we're live and you can come and join us on a daily basis. Let's break down all of the different indexes real quick, Matt. Doesn't that need to take a long look at them? But go through the Dow, the NASDAQ, and the Russell. Tell me if you're seeing any strength or weakness across one versus the other, because I didn't really see it. I think the Russell has the most unique chart compared to the other three, but break them down for me.
Well, you're seeing very similar things on the Dow Jones as we're seeing on the S&P 500. I mean, that's been the case for the better part of the last few months as, the blue chips have really kind of been running in line with one another. You're showing a little bit of hesitation, a little bit of a high base here. The trigger on the Dow would be a little bit more difficult, in my opinion, than on the S&P 500. But that overhead resistance, you're really looking at that 28,900 type level. When you're looking at the NASDAQ here, the NQ contract, I'm seeing a little bit of a tighter trigger here on the NASDAQ, a little bit more strength on the NASDAQ from a technical perspective. But we've been seeing the NASDAQ show strength across the board. It's got to be the number one index out there, S&P 500 2 and the Dow Jones 3, in my opinion. You're looking at a high base with a pretty clean trigger right there at above 89.07 on the NASDAQ. And then when you're looking at the Russell 2000, obviously this is a little bit of a bullish retracement that we're seeing. A lot of volatility, tough triggers here in any capacity. It's going to be interesting to see kind of how the Russell 2000 performs. It's underperformed the broader markets, as the broader markets have really kind of maintained their high base type levels over the last week and a half. The Russell showed a tiny bit of weakness. The 9 EMA is crossing over the 20-day moving average. And if the Russell does come underneath that 1650 barrier, you're probably going to come test that 50-day moving average on the Russell 2000. So keep an eye on that 1650 barrier as a support level. A close under that could see more price depreciation on the Russell. But I see this underperforming a little bit right now.
Yeah, so NASDAQ you've got as 1A kind of, and Russell probably the fourth one. Is the other two kind of right in the middle?
NASDAQ, S&P 1A, 1B, Dow right underneath that, and then the Russell 2000 is still trailing.
You know, what's really interesting about the rut is if you do get that deeper pullback into that like 1610, 1620, or even 1600 zone, that's year-long old resistance, new support
Mhm.
potentially through the quarter. But that's more of a longer-term chart setup. In the short term, and man, it's coming into that little moving average pinch. Going to be interesting to watch this one.
Yeah, if it does do that, you're talking about a short-term bearish downtrend at that point. What I was talking about was more like just a deeper retracement coming
Mhm.
into the 50. But if you do see that 1600 level, you're probably going to have lower lows, lower highs at that point. And then at that point, you really kind of need to switch it to a weekly chart to get a cleaner understanding on if this is a position trade. But as of right now, I'm not seeing it.
Talk about a messy chart. Let's bring up crude oil. In some ways, it's clean. Some ways, it's messy. I'm looking at the long-term charts on the weeklies and the monthly, and it's range bound. But then on the daily chart, Matt, it's just beautifully bullish. And now coming back 2 days in a row, so much of this is driven by news as well. This daily candle coming back into the 9 or the 20, I could see why a bull would be very interested up in here, Matt. Volume spiked when it did take off. What's your read on crude oil right now?
Crude's really kind of been riding the nine over the course of the last 3 weeks here, and then obviously with the news that came out over the weekend, you really saw crude kind of pop. And I said this yesterday. It really kind of, at first, it just reminded me of when the Saudi Arabian oil was targeted here a few months ago, and so it really kind of gave me some hesitation here, Tim. And like I said yesterday in the podcast, and I said it in the halftime report as well. When Middle Eastern tensions increase, we always, like, in our minds, we think that's going to be really bullish for crude oil. But like I said yesterday, in the last 19 times this has actually occurred since 1990, oil's underperformed the S&P 500. Oil's underperformed the defense stocks out there as well. I do see this a little different today now, though,
Mhm.
because unlike last time this occurred with the Saudi Arabian incident, you saw that snap back immediately, violate support levels. And I'll kind of pull up that picture here. You saw that snap back immediately, find the 9 EMA there, but then just get absolutely blasted back down when, we started realizing that Saudi Arabian oil production was not going to be, decreased that prolonged, and they were going to be up and running in no time. To me here, crude oil is a little bit different because we're seeing a little bit of hesitation at that $62 level of support. And if you look at this from an intraday perspective, kind of coming into that, that 30-minute chart, you have that 62 level over here, intraday resistance, intraday resistance, intraday resistance. And now you're seeing that deep little pullback coming into that 62 channel. I don't like the trade today just simply because we got a downward moving candlestick. Let's see how that really kind of behaves. This is one of those situations where I'm like, just give me a doji.
Yeah.
Give me a doji, give me a narrow body candle right there at that 62 level. Let the 9 kind of catch up to it just a little bit more, and maybe you got a trade coming into tomorrow, or maybe you got a trade coming into on Thursday. But as long as 62 holds, I do think there's a trade here.
Yeah. Yeah, I do as well. In short term, obviously, you got to like that breakout. By the way, we were debating during the entire month of December. It felt like, what are you going to do above 60? Well, it immediately went to 64. And I know some of it is news driven. That's why you got to trust the chart, right? I mean, you trust what you see and not overthink it. Because now here we are in a short term uptrend, needs to come back, find a doji, give me a new entry point. I think there can be something there for swing traders, right?
Yeah. I do believe so, yes.
Yep. Natural gas trying to find some support. The ETF, it looks ugly. The futures contract looks okay from a support standpoint, Matt, but short-term downtrend. We've got this one on a bear ranking over at Tackle Trading on the Commodity Report. Negative 35 is tradable to the downside. I wasn't there. Defend the ranking, young man, because I would probably say, give me the 40, give me the 50, but I'm biased, obviously. You guys know me with my natural gas bull puts. What are you reading here?
And what was the exact ranking?
Negative 35.
Negative 35. The downgrade happened because all of us felt like that 2-2 level was very concerning, number one. Number two, Tim, look at the 9 EMA here. Look at it over the course of the last month and a half, 2 months. Once this bullish retracement failed, it has basically just rode that 9 all the way down. And so as that 9's putting pressure on it, technically, those algorithms, Tim, they're smart. They're programmed very, very, very well. And so the downgrade was because even though intermediately the trend when you're looking over the course of the last, 4, 5, 6, 7, 8 months, you would say neutral. Maybe a negative 45, maybe a negative 40. But I do think that 9 EMA has some pressure to the downside, and the violation of 2.2 just happened. It just tested too many times in the breakdown, coming into last Friday, I thought was legit. 2.1 is going to be important here. It's starting to form an intraday support level at 2.1. 2.1 doesn't hold. 2.0 is in target here.
This product has become a funny one for me in my personal trading and all that kind of stuff.
It really has. It's really tested your emotions.
It's so stupid because I literally don't do anything different, but I debate this one more.
All the time. You do.
I sit here and psychologically just run it up and down, and I don't change anything.
Well, you've cash flowed on it for 2 consecutive months on positive theta. Both trades have worked out beautifully, even though it tested your emotions a little bit. How many times I'm like, Tim, 2.2 still holding, 2.2 still holding. You got some time, and you're all the way down to like 195. And I mean, for that to occur, I mean, even at this point, Tim, I mean, a 195 contract, what would that be?
Oh, I already knocked down the profit on that trade. No,
what I'm saying is a lot of times we get so concerned that a minor level of support is violated when you're under 3 more levels of support. You know what I mean?
Well, and you always call it zone defense, right?
Well, that's what credit trades are. Mm-hmm. They're not man-to-man, they're zone. Well, look at the 195 contract here, Tim. You would still have had, with 21 days to go on the contract, a 14 delta. Mm-hmm. Right? With the probability of touch around 25%, I would say. So the odds are still there for you. And that's why I was always like, just, trust the plan, trust the trade.
It's a good reminder to everybody out there, which is why you build a trading plan, then you execute your trading plan. You do not get emotional about it throughout the duration of it. It's easy when you're in the middle of something, Matt, and you're sitting there staring at it. You're like, am I in the right trade? Am I in the right trade? But you got to just trust that plan that you put out there in advance, right?
Well, I think it's hard with credit spreads when they start going against you initially and you still have 20 days of time frame, right? Because theta hasn't caught up to delta yet. And so what you're seeing when you look at the profit loss chart, you're seeing a loss, and sometimes you're seeing a loss above whatever your credit's going to be if the trade is successful, correct? Yeah. And that's because the theta has not caught up. Remember, theta kind of represents a little bit of velocity as it comes into that last 2 weeks of the contract, especially with gamma. And so if you're trading your trading plan and you're sticking to your price levels, the profit loss really shouldn't be that concerning if you know theta is going to catch up to it. But it can be concerning for new traders. There's no doubt about it.
Yeah. The emotions of management. It is definitely a learning curve for anybody out there. And if you're a new trader or a veteran trader, you know that managing is where you make your money.
There's nothing worse than taking max loss on a credit trade.
Nothing
worse. Because all of a sudden you're like, it's going to take me 4 months just to catch up on the cash flow with that one max loss. So yeah, it can really tax emotionally. And that's why some people, some people will do it, and initially they do it for 2-3 months and they don't understand credit trading that well, and they'll just give up on it when, you got to give credit trading some time before you really understand it.
Yeah. I love credit trading. I love theta trading. I love all those things. And there is a learning curve with those systems. No question about it. A great course, by the way, if you want to learn about some of the management, some of the stop losses. I love that cash flow condors course because it is teaching credit trading on a neutral level, bear call and bull put spread on that RUT index.
Well, and obviously the system is on the Russell 2000, but those rules, can be applied on many different credit type trades.
Yeah, I think there's a lot to learn and take from that course, no question. Gold, silver, the metals market. Let's talk about it here real quick. Gold yesterday hit one of the highest prices it has been to in quite some time. Matt, prediction.
Let's say 2013.
Man, I think it's been 5, 6, 7 years now. In fact, I'm looking at the monthly chart on gold. It's been some time, in fact,
it's 2013.
Yep. And 1600 just psychologically feels like an important level. There's no question about it. In fact, in 2011, 2012, Matt, that's where some support was coming in before that broke into a downtrend earlier in last decade. Now here we are breaking into an uptrend. I'm bullish on gold. You're bullish on gold. We've talked about it on the podcast. What are you seeing in this metal?
I'm just going to say 2 things here. If we see an increase in geopolitical tension, and and if we're right on the Fed that they're going to increase the balance sheet, right? I don't care what your technical levels on gold are. Okay. You'll use them from a triggering perspective, but 1600 isn't going to carry in that environment. 1700 might not carry in that environment. 1850, the all-time high, might not carry in that environment. So to me, if you're looking at this on that weekly chart, that's got to be a clean breakout there. And even on the daily chart here, when you saw it kind of test underneath just a tiny bit earlier today, again, looking at that 30-minute chart, when it tested down just a tiny bit, really kissed off that intraday resistance level over here, and then found support moving back up. Gold's, I mean, I don't know how bullish you can get on gold right now, but for me, if I was ranking it now based on what we've seen with the breakout, I would put it in the very bullish category right now, based on fundamentals, based on geopolitical situations, and based on just your typical technical analysis here.
Yeah, I think 20-yard line and then debate it from there. You go higher, you could go right there, somewhere up.
You would have to convince me at 20.
Yeah, 15 seems very legitimate.
Yeah,
I think the only caution would be that it was a news-driven thing. Obviously, I mean, you got to take that into account, but the chart is the chart is the chart.
Yeah, but isn't gold always news-driven?
Man, it has been. Yeah. And that bull flag on the weekly, I got to tell you, we talked about it for months and months and months on this halftime report as it was developing, and it's not doing anything and it's not doing anything. But the second it broke above 1500, then confirmed above 1520, these are triggering levels.
Yep. Hesitation, 1520, breakout out of a high base, broke out of the 7-year high there, and gold's finding support.
The only metal that is probably still more bullish than gold is palladium, by the way. It did cross above that 2000 mark again, and actually just been on a tear here, Matt, since that deeper retracement. About 10 green candles in a row to start the year, and just incredibly bullish. If you had to rank one or the other, palladium or gold, don't you still have more bullish? I do too. Yeah.
Palladium.
Yeah.
If I would put the gold at 15 to 20 yard mark, I'd put palladium at the 5 to 10. I mean, this is just a very, very bullish chart here. And I'll just remind you what I said 2 weeks ago when we were looking at that retracement here. I said, come on, we've been waiting for this. Right? Let's stop being wimps.
Yeah.
We've been waiting for this.
Yeah. And by the way, not a red candle since then.
Well, you had one, but it was doji. The 9 and the 20 are kind of hiding it a little bit. But it was like literally down 1 penny. It was nothing. But yeah, let's face it, palladium can do this. That 2000 is a barrier and a trigger above that. I mean, where's the ceiling on this, T?
There is not one.
Make one up.
Yeah,
Make one up.
You could
That's
pay range.
all anybody would do.
Right. You could draw Elliott wave extensions and Fibonacci extensions.
That's making shit up.
I know. That's what I've been saying for years, by the way. Cody just agreed with me. Pull that clip. That's making it up. That's what those fib guys have been doing since the beginning of time, Cody. There's not some magic order of mathematics in the universe going to tell you when to buy AIG stock. All right.
I have told you for many years, Fibonacci extensions are worthless, but Fibonacci retracements still have a legit purpose of identifying support. That has been my stance for a very, very long time.
Look at that Tom Hanks look Cody has on his face right now.
You're getting it now, buddy. You're getting it now.
Oh, by the way,
I haven't said a single word during the halftime report, and he's over here just immediately bashing
just coming in.
Dips, and he's like, "Come on, Cody, come on."
Did you see Tom Hanks' reaction to the Golden Globes? Oh my God!
It's gonna be beautiful. Let's just put it like that. The memes for 2020 on Tom Hanks is truly going to be beautiful. Not necessarily Tom Hanks, and I am switching the talk here a little bit. We'll get back into some corporate news. But Tim, did you see like the biggest convention is happening down in Las Vegas right now?
Oh, and I do want to go through a bunch of those companies' news: Uber, Amazon, Samsung, the CES convention. In fact, Jimbo, one of our friends, Team Tackle, he's down there. He posted on Twitter that he's down at that convention right now.
175,000 people will attend that.
175,000.
175,000 people.
Wow.
Yeah.
Did you read some of the headlines?
Listen, I did. And I told you this before, and I'll tell the crew here today. Anytime I see those technology conventions, the consumer electronic conventions and whatnot, I just always think that they just watch 1990s, movies, and they just grab all these ideas, and it's like, wow, fantastic. We're going to have, flying cars. And it's like, yeah, maybe in 3 decades. I don't know.
Yeah.
But yeah, I did see a lot of the news.
Well, let's talk about those in like 2 minutes, 1 minute, but let's quickly peek at the dollar. And I want to get your read on two different economic data points, Matt, I saw this morning. There was an ISM number that came out that was pretty good. And then there was a trade deficit number that came out that was pretty interesting as well. What was your reaction to seeing those data points?
ISM non-manufacturing report came out today, came in at 55 versus the 54.5, showing a little bit of positive momentum in the service-based sectors that we're seeing in the U.S. The 55 number is a good number for that, and the dollar's obviously going to respond in kind. Then they revised the trade deficit numbers for Q4. Those came out today as well. And for the first time, we actually saw our trade deficit fall a little bit to about $75 billion. And that's going to get some positive, headlines, no doubt about it. But when you actually look into the numbers, I didn't see it as that positive. We just saw a decrease in importing. That's all we saw. We didn't see an increase in exports. We didn't see an increase in economic activity. We simply saw a decrease in American companies buying foreign goods.
Mm-hmm. Mm-hmm. So it probably would catch some interest, the headline itself being the lowest trade deficit.
I think
since
that
Trump took
headline's going to be
office.
used much more in political purposes than any other.
That's what I'm getting at. Yeah. Seemed like a political headline for sure.
People use it without an understanding of what it is.
Yeah. Yeah. Well, I mean, here's the thing. We're moving into 2020. One of the storylines this year will be that trade resolution. I think the market's pricing in that things are moving forward in a positive way. The bigger risk in my estimation.
Any negative headlines on that trade?
Not a single one, which is, by the way, where my caution comes in. My natural trader kind of where's the risk assessment might be that if some kind of wrench got thrown into that process at some point in the first quarter here, because everybody is assuming that deal is getting done and moving forward in a positive fashion. Markets are pricing it that way, Matt. I don't see anything different. Do you?
I don't, not as of right now. I mean, we have heard since mid-October that the deal is going to be signed in any time, and that keeps getting pushed back. We're now kind of expecting mid-January. So is there some risk that we keep pushing it back a little bit? Maybe, but again, I just haven't seen any negative rhetoric coming out of China or out of the U.S. regarding that phase one trade deal.
Yep. Let's talk nerd here for a few minutes because you did bring it up a minute ago. And some of the most interesting things I read this morning were from that CES report. Bring up Uber first. I got to tell you, I read that they're talking about going into a partnership with Hyundai, Matt, where they're going to put out flying cars.
Yes.
Would you drive a flying car?
No.
No, and neither would I. Do you expect flying cars to be at the dealership or on the road anytime soon?
I might fly a 737 MAX plane before I flew a flying car.
Can you imagine the amount of like flight restrictions and things they had to make for the idiots that just get up there? You get in an accident in a flying car, you're not going to kill yourself.
I thought we were still building tunnels, and now we're building flying cars. I can't keep up with silicon.
Dude, I think it's cool. Obviously, the Jetsons come to mind.
Does Uber really deserve to be up 2.66% on news that they're going with Hyundai to build flying cars?
No, first of all, we don't know the cost. We don't have a path to profitability. Is literally is just a
Tell me what decade?
Yeah.
2050s, 2060s, 2070s, 2100, 2200. What decade? What century?
Maybe this century. I'm sure it'll happen. By the way, I was telling you guys in pre-production, I saw it last year. They were talking about those drones, right? Having personal drones for everybody. That felt like that could be something.
I remember all the projections on where technology was going to be in 2020 based on the 90s and early 2000s, and we haven't seen it.
According to Back to the Future, we should already have hovering skateboards, and we should be wearing our pockets inside out.
And Lewis says,
I really do believe these tech companies just basically watch those types of movies and then make it all nostalgic for all of us. And we're like, let's just go buy their stock now.
Lewis, you are an incredible member of Team Tackle here. He says, why not? You are killing innovation with that thinking. I'm going to tell you why not, Lewis, because I'm a kid from the country who's not getting in a flying car. It is completely personal. It is me, not the world. I can tell you, I don't want to stop innovation. It doesn't mean I have to be the one who goes out and tests it, Matt.
No,
No, no, not at all. Not
Listen,
at all.
Buffett missed out on 20 years of technology. I think it's okay to miss out on flying cars if they ever exist.
Another reminder that privacy is going to be a thing of the past at some point. Amazon is partnering with a bunch of automakers to put Alexa into vehicles, Matt. So your Alexa, who's listening to your conversations 24 hours a day, will now be in your car, knowing what you're doing there as well. Would you install an Alexa in your ride?
I wouldn't install an Alexa in my house or anywhere else that has any capacity. I'm a privacy guy.
Yeah.
I don't need big tech to monitor me and my wife's conversations. I don't need them to record when I'm trying to teach my daughter a principle. I don't need those things.
Mm-hmm. Cody, what about you? You're a millennial kid, and a lot of the millennial generation, they just don't seem to be as concerned about privacy. Now, I know you're also a Texan and a conservative, so you might fall on the other side of that, but would you put an Alexa or some kind of form of that in your car?
I don't have one in my house.
Right?
Yeah.
Yeah. Dude.
Cody's a privacy guy too.
Yeah, I know. It seems like the world is moving away from privacy. We probably need a reminder to come back to it at some point.
Oh, I don't know what would have to happen, Tim, but I got another email just today that my personal data has been compromised by some big tech firm who got hacked. So I haven't looked into it yet. I literally just got the email today. So it's concerning to me, but it obviously is not concerning to the generations coming up who, unlike our generation, we didn't grow up on tech. We grew up throwing dirt clods at each other,
making mud pies.
Yeah, exactly. Tim deserved it, the tomato and the dirt clod. But no, but to those new generations, I mean, look at our daughters, right? I mean, they're on tech nonstop. They're growing up into that, and it's just going to change their generation, whether we like it or not.
Mm-hmm. No, correct. I mean, even just some of the stuff that is at the CES thing today that I was reading through, and I'm like, well, that's just obvious, where they're adding like fancy new cameras or new LED screens and all that kind of stuff. I'm just thinking 10, 15, 20 years ago, that would have been innovative at a level that would have completely blown our mind. But it's just moving faster.
I do think there will be an event in the future that will bring privacy back in line. I just don't think it's going to be led by the consumer. I think it's going to be led by government.
Might have to be. So. By the way, kind of as a nice little transition as well, somebody who's talking a little bit about privacy and also just having clarity out there on the web. Facebook is supposedly, and I'm at the headline says Facebook bans deepfakes, but then I read the article and they didn't ban deepfakes. Actually, they said that you can have satirical deepfakes on the site. What was this all about? I mean, obviously the deepfakes, those videos are pretty impressive.
Well, those deepfakes are so scary, to be honest with you. Mm-hmm. I mean, I've seen some of those deepfake videos where you can't tell. I mean, you can't tell just from just the blind eye. And Google recently outlawed on YouTube deepfakes. Twitter also outlawed on Twitter deepfakes. Facebook has been slow to the party on every single one of those issues. And so they came out today and they announced that they're going to outlaw deepfake, deep fake type videos and pictures from I believe a political purpose. And they were going to allow the comedy and the satire and all that. And then it's like, you asked me the question in the pre-production, you're like, well, who's going to determine what is satire and comedy, right?
Yeah.
I said, well, your overlord will, Mark Zuckerberg, right? And so, yeah, good on Facebook for announcing that, but I haven't seen Facebook carry through with anything. The reality, though, is Facebook breakout of 210's legit here, T.
Oh, no, it's had a legitimate technical read. And by the way, when you asked me on the podcast, what's your number one sector? And I was talking about communications, right? I love communications for many reasons. And Facebook, they're probably doing this because they got to get in front of it, Matt. Could you imagine a political ad being deepfaked and put on Facebook and trending? I can see.
Does Facebook get in front of anything, though?
I hope they're trying. I really do. I want to believe that they're trying at least.
Google and Twitter was putting political pressure on them to comply and come around to it. Zuckerberg doesn't lead anything. He does everything for $1.
He is a capitalist. There's no question about it. It's going to be an interesting year for this company and this entire sector. And we'll see. We'll see how it shakes itself out. By the way,
capitalists don't do anything for $1.
Right.
That's not what a true capitalist does.
Right. They try to provide value and actual service and actually build stuff and create solutions to problems.
Yeah,
that's right. Yep, I'm with you. Other companies, we're talking about Tesla pre-production. Matt, did we just literally miss this move?
we have missed out on this entire thing.
God.
Just, and obviously up 3% again today, the breakout of 450, no hesitation there, just momentum beyond momentum. And give Elon some credit here. He wanted to destroy the short sellers, and he has just destroyed the short sellers in the last 2 months here. Like Tesla, the news today was positive. Let me get you the exact news. Model Y program launches in Shanghai. Did you guys see Elon dance?
No, hold on.
Yeah, he was dancing. He was dancing on the unveiling there. It was kind of funny. But also, Tim, an analyst. I want to get your take on this. An analyst. Now, mind you, Tesla is currently pricing in at $466. An analyst firm on Wall Street raised its price target from $200 to $340. I'm willing to bet they were part of those shorts that just got destroyed.
Dude, that's funny. I mean, I'm looking, it was a Credit Suisse analyst, by the way. They had it as underperform at $200. They had to raise it to $340. It's already up at $466.
$460.
Credit Suisse. And I'm looking up and down the list of upgrade downgrades. They have not had an upgrade downgrade from Credit Suisse in a long time. So that's a stubborn analyst who had the $200 call.
That's a stubborn analyst who had short position.
So, and then the fact that on the news, they will cite that as a positive somehow, some way is just silly when you think about it. Obviously,
when you really think about it, the current price is 466. It gets upgraded on a price target to 340, and everybody's like, buy.
Yeah.
Right. So that's par for the course with Tesla.
By the way, the short float, Matt, 19%.
It was 30% a year ago.
1 year ago, we were at over 30. Even 1 month ago, when we were talking about it, it was at 21. The short sellers are covering. There's no question about it.
Wouldn't you?
You'd have to. Yeah.
I mean, you're getting blasted by Tesla. Elon's got to be popping champagne and just having fun over this.
No wonder he's dancing.
Again, I'm not a hater of Elon. I just wish he didn't try to manipulate his stock price and lie to his investors. But outside of that, I'm not a hater of Elon. Good for Elon to win this battle.
Oh my God. I'm watching him dance right now.
It's funny.
You got to watch that team out there. Go just look up Elon Musk dancing in Shanghai after that.
I'm not passing shit. It's probably what I would look like.
I'm telling you, I'm not saying I could dance better, but it is very, very entertaining. There's no doubt about it. Boeing was in some news here today, Matt. I went through all the headlines trying to figure out what the positive was. And you're like, oh, well, Tim, they settled some suit with, American Airlines or whatever it was. Yeah. And it is moving up.
They settled the suit. Boeing settled the suit today with American Airlines. I think it was $30 million that went into the employee pension plan, I believe. So that was part of the news on Boeing. But I saw they had some more negative news on the 737, some possible more delays there. I didn't take it as a positive, to be honest with you. I mean, I get it when Johnson & Johnson settles for $6 billion when everybody thought it was going to be $16 billion. $30 million in a settlement to Boeing, which is a $200 billion company, is nothing. It's just nothing. And so the only thing I wrote in my notes, Boeing is still a disaster. I don't care what happened today.
Yeah, I'm with you as well. It didn't really make a lot of sense to me that was going up. And by the way, there's a tail on the top of that candle, probably because a lot of traders are reacting the same way you and I have here today. And then Apache, Matt, real interesting chart here. In fact, it's one of the biggest stocks that is up this amount here today. And the headline is they found oil. Isn't this an oil company?
Well, Cody sent over the notes. I read the notes and I saw Apache was up 24% at the time. I'm like, I got to dig into this. What's going on with Apache? And the headline read, Apache found unexpected oil well. And immediately I just started singing this, the theme song to Beverly Hillbillies, just immediately. Just a man named Jed. I'm like, wow, Apache, that's pretty big news here. Obviously a big time bullish candle, breakout gap type situation, not closing yet. Let's see the close here. But if you do close near the highs of today, Tim, you could bar by bar that momentum. I have not dug into that news but you are seeing absolute reversal characteristics here. For the first time since 17, you see a double type bottom right there at $20, a double top right there at 26.50, and then you get the upgrade with the news of the oil well, and you just see confirmation reclaiming everything. Maybe you wait to settle it, but I do believe if you're looking at the energy space for oil drillers, this one's got a lot of momentum. I'd put it on a watch list if you're looking for a spot in this space.
It's a huge candle, huge volume. It's happened a couple of times the last month, and really, really impressive. I think watch list is appropriate as well. Speaking of watch list, we do a weekend watch list each and every week for pro members over at Tackle Trading, Matt. There's a couple interesting candidates out there. I saw Nike, actually. Very aggressive traders might have triggered into Nike. I saw Lulu, and there's a bunch of action on the Tackle 25. So even while the market's not really doing much here today, Matt, I am seeing plenty of setups that are developing. What's grabbing your attention out of those?
Well, I mean, Nike confirmed on an aggressive entry. We've talked many times in the past in the halftime report about aggressive versus conservative entries. Aggressive entries, you can catch a lot of the momentum, but these things happen. Nike triggers in aggressively, comes back down within the base. I like Nike here, but I like it on confirmation. What's got my eye? The semiconductors we already talked about. I'm still waiting on Apple here. I honestly do not believe there's a cleaner trigger than above 300 in the entire stock market than Apple.
By the way, I mean, if
you were looking to make a trade here, this is what you've been waiting to see for the last month. Hesitation, high base, easy trigger, easy stop. So Apple's certainly on my mind. Baba's showing me something very, very similar to Apple as well. Pretty clean trigger, not clean on the gap, but clean trigger above 2020. Keep an eye on Baba, keep an eye on Apple. Those two are really kind of at the forefront of my mind.
I was very interested in NVIDIA as well. And then a bunch of Tackle 25 candidates grabbing my attention. Matt, CSX, you had mentioned that one. And they actually had an upgrade as well here recently, going through my watch list. I like the fact that I didn't miss this one yet. Some nice news. If it broke above, 74 there, those pivots?
74 and a half. I mean, you could trigger in. But if you're going to do it from an investment perspective or a recover call, you might want to wait till the earnings.
Post earnings. But man, I did
pretty tight on earnings, and then you'd have to be covering and collaring. So, yeah, as a trader, maybe above 74, but they did get an upgrade. But Tim, in this upgrade, they also stated that they have CSX as a top value pick. That came out today. I did the coaches show last Tuesday where I was praising CSX as a top value pick. I wonder if they're pro members.
You want to get at least cite us, guys. I mean, if you're gonna,
at least give us some spread up. Come on.
That's right. Shoot us a shout out. There's no doubt about it. And then Matt, probably one other candidate on those lists that is really grabbing my attention is Pinterest. And I know it's a dirty, sexy money candidate. It's a cheap candidate. I like the reversal developing in here with the pivot relationships. It's not there yet. It has to break above 20, Matt, but I've got this one. I'm targeting it. I'm waiting for confirmation as well.
I think a break of 20. You're not only breaking above 20, a significant whole number, you're also reclaiming that 50-day moving average. And we've seen this a few times. When you do reclaim moving averages, you have a tendency to get a little bit bullish momentum. And it's almost like those algorithms know that, right? Those algorithms know that. So, yeah, I mean, if you're looking for a DSM candidate right now that, is not a fundamentally strong stock, but a stock you maybe believe in that has some reversal candidates, bottom picking, good covered call type candidate where you can offset some of the risk, Pinterest is in line for that.
Yeah, definitely. And I don't know how to read this one yet. And I'm trying to be open-minded, just read the chart, but Beyond Meat looking interesting here. And I've been bearish on Beyond Meat for a long time. I come out very critical of the company now for quite some time, Matt. Some positive news in the space about some new products that are coming out, not just within this company, by the way, but even some of their competitors. I saw some like pork-based products, things like that. Beyond Meat showing
I didn't read the article. I did see the headline, some pork meatless type product. Right.
But I don't even think it's their product, which is interesting.
It's not. It's Impossible. Impossible Food,
yeah, it's Impossible,
right? One of their, the same one that has the Impossible Whopper. They're looking to make so they made a beef type. Now they're going to make a pork type. And they're talking about starting by launching it with Burger King's breakfast sandwiches as the sausage. and then they're going to see how that goes, and then actually try to move it into China, because most of Burger King, they're international. They have more business overseas than they do here. So if they can get China, who's the world's largest consumer of pork-based products, to accept a plant-based pork product, that could be a win.
So it feels ancillary.
Pork roast just for protest purposes.
I think I'm going to smoke me a pork butt. Just
pulled pork sandwiches.
Well, you are in Hawaii, buddy.
Yeah.
Just be anti-plant. I can't smoke a plant-based pork butt.
Listen, I mean, you got to respect the candle.
Some plant-based things there, Cody.
8% here, but if it's not even this company's news, Matt, I don't know if I get that excited about. No,
I'm not excited by it.
No.
I mean, I see the double bottom right here, right there at 72. I see a little bit of a double top scenario performing about 85. You're reclaiming that 50. You can make the same argument on Beyond Meat that you can on Pinterest.
Yep.
But what you can't do is it's so hard. I mean, the volatility in those option prices are so difficult.
What's the call to put ratio still on those things? Is it still?
I mean,
crazy?
I don't think you could call it. It'd be too expensive.
What about something like a debit con maybe, or a volatility play, something super advanced you might be able to pull out of the bag of tricks?
I think you'd have to get real creative with your entry on those options. You would have to do single entries, and I think it would be a nightmare to manage.
Yeah.
I mean, I get it if you want to have, Beyond Meat in your portfolio and you're looking at it from a long-term perspective, but I wouldn't treat this as a covered call type candidate.
No.
Way too volatile. It'd be way too volatile for the dirty, sexy money list.
Even just managing the short call options would be a nightmare, even if it worked out. Yeah. Well, guys, that Tuesday show here, a lot of fun, a lot going on. There's actually a lot of companies out there that are very interesting. Even the ones on the option report and stock report we didn't talk about. I thought there were some good candidates on the bear list that just haven't triggered yet. Tractor Supply, by the way, TSCO just took off. There was a bunch of candidates on the bull side as well. I mean, this was on the bear option report, Matt. And if you didn't get this one yet, you probably might have missed that one.
Yeah, then you could play the momentum, but you're on Tractor Supply. You definitely missed that trigger. That trigger really kind of happened today underneath the low, or yesterday on the aggressive type entry. But now you're kind of catching into that support level right there. If you do break that support level, Tim, wow, it could get ugly for Tractor Supply, though. You could re-trigger here.
Yeah, I do like that bigger picture setup. And obviously the pivot relationships there are looking great. It's one of the values of those reports, Matt. I was traveling last week, teaching a course out in Philadelphia, and I get home from a long weekend of travel. I pop right into my accounts. I go right into Tackle Trading, and you guys had bird dogged up a bunch of great picks, and that's kind of what the whole point of the community is over there at Tackle Trading. DHR here as well, looking good. I didn't see that.
I'm just saying, yeah, I ran some scans earlier today, and I'm just seeing a lot of these types of setups. Some have confirmed, some have not. But I mean, you don't want to miss out. If this market does break out of its high base, you're going to have a lot of good bullish candidates.
Yeah. Well, and even Fortino.
And even if it maintains, you can still have some really good bullish breakouts.
Couple of good questions here in the chat. First of all, Fortino brings up work. Slack is also popping out there, and I do like that company for this year. There's really, really good reversal characteristics.
That's a dirty, sexy money candidate, and that's showing reversal characteristics galore, even better than Pinterest.
Yeah, and then Jeremy, one question here in our chat. For things like Baba or Apple, where do you draw the line between triggers on the daily and seeing weekly that might be overextended? That's a good question. If you're swing trading, Jeremy, you got to play the daily candles.
Yeah, listen, if you're making that decision on Apple based on overextended on a weekly chart, and I completely understand that was overextended literally in September, and it has now seen 80 points of price appreciation since that time frame.
Yeah. Yep.
Things can stay overextended for a very long time. That's why when somebody says like the RSI is overextended or stochastics is overextended, I'm like, they can stay overextended for a prolonged period of time frame when you have a hot market in a hot stock.
Mm-hmm. Yeah. Especially momentum-based trading. I mean, we learned that from the turtle traders 35 years ago when they talked about momentum trading and trend-based trading and all that kind of stuff. But I understand the caution. I mean, you're looking at a company that's gone from $200 to $300 in the last, 6 months, so I understand the caution, but man,
but we're not talking about Beyond Meat here or Tilray, Tim. We're talking Apple, $1.3 trillion company with a 20 PE ratio. So
that's right. Yeah, that's right. That's right. You are welcome. Jeremy says thank you for the analysis as always.
And for me, the trigger, Jeremy, would be above 301 on Apple.
Paul asked for a quick read on CGC and the pot stocks. Got a lot of opinions on these stocks. Right now, it's neutral with some reversal characteristics, Paul.
Head and shoulders pattern. Mm-hmm. CGC does have very similar to what we're seeing in some of those other kind of stocks that have been beaten up a little bit. Does have pretty clear reversal characteristics, left shoulder, head, right shoulder, very clean neckline right there, right around that 2150 level.
Yep. Fun show, great show. Time to go. A couple things here as we wrap up our show. Number one, we have fun here each and every day. Come and join us live. We always like to create some energy, and we appreciate you guys on Team Tackle here in the chat, in our community out there. Matt, we offer a pretty standard 15-day trial out there for people who are watching this and aren't a member of our pro community yet. Head on over to tackletrading.com. There's a trial link right at the top, or even right here in the chat, in the comments below, you can sign up for Tackle Trading. We're on all the social medias, Instagram, Twitter, and here on YouTube as well. Subscribe, click the bell.
And if you don't follow Tim on Twitter, go hit Tim a nice little follow at Tim Justice Utah. We also have me at Matt Justice13, at Tackle Trading, at Trading Justice. And very quickly before we sign off, final for today, you did have two more upgrades. WDC Western Digital got an upgrade. Break out of a multi-week type resistance level here, Tim. So you're looking at that breakout. WDC can absolutely fly. It's a stock that is a high flyer growth, both up and down. It can go up 50% and it can go down 50% in a very short time frame. Keep an eye on WDC with that upgrade and that breakout. Also Square, which has been a darling in 2018, really kind of stuck in the mud in the last year and a half. It also got an upgrade as well today.
That WDC, just another reminder that chip makers are so strong. And I didn't see the Square upgrade, so thank you for bringing that up. And yeah, it's neutral in the middle right there. But man, that is a fundamentally sound company in my estimation. I've been interested in that company for years now. So I'd love to see a breakout there, Matt, on Square. That would be tradable, and I would be interested.
Well, Square's breakout is going to take a long time.
It might take the whole quarter.
Range of neutrality.
By the way, one of the topics that we're going to be talking about more and more through the month will be corporate earnings. One quick reminder to everybody out there, if you're a new trader, check the earnings dates on companies. You should know when they're coming down the pipeline as you build your trading plans and as you execute your trading plans. Great job today, Matt. I see that we've got the shark behind us.
Well, it's the standard. It's my daughter. She had me do Pennywise last week, and I think I triggered a few people. What is going on behind you? I'm like, that's Pennywise. Like, why do you have that? I'm like, my daughter asked me. I like to make my daughter happy. But she is my daughter. She's 10 years old. She has this love of sharks. That is not natural, but she loves sharks. And her favorite shark is the megalodon. I keep telling her it doesn't exist. Her second favorite shark is the great white.
Dude, I love it. Pennywise terrifies people. It was
an ancient creature.
Yeah, that killer clown behind you.
He doesn't want to listen to your logic, Cody. I'm going to tell you that right now.
Oh, Cody, we're going to have some fun this week. We will see everybody back here tomorrow. 12:30 Eastern is when we go live. Come and join us. We'll see you then, guys.